I'm Mary Kinney. I'm the Executive Vice President of Ginnie Mae, and it's my great pleasure to welcome all of you here today to the 215 Summit, the Ginnie Mae Summit. It's great to see so many people here. I think looking across the room, this is our largest crowd ever, so we're very excited that you would take the time to join us. We have a great program for you. We're going to have some workshops throughout this afternoon and all day tomorrow to cover things that have been going on at Ginnie Mae. And we also have some great speakers this morning and over the lunch hour to talk about what's going on actually in the industry. So we look forward to your active participation, and any feedback you might have, we welcome that as well. It's now my great pleasure to introduce someone who rarely is ever hard to spot in a crowd. It's someone who we at Ginnie Mae look up to figuratively and literally every day. I am honored to say that I have worked alongside Ted for 5.5 years now. We were introduced 6 years ago next week when the then Secretary of HUD, Secretary Donovan, was finalizing his selections for the President of Ginnie Mae and for the EVP of Ginnie Mae. And he thought, what a great idea to bring them into the office and have them meet each other. Now, mind you, we'd both done our homework on each other, so we checked each other out already. And so he invited us both in and to his office, where we met for the first time. Again, this was 6 years ago and next week. And then he tossed us into his conference room and locked the door. And he left us, the two of us, alone for half an hour to see if we could play well in the sandbox. Well, I think it worked out. Nearly 6 years later, all of us here together have worked collaboratively to grow the Ginnie Mae program from an $800 billion program to nearly $1.6 trillion. And together, with your participation, we have undergone tremendous transformation and modernization of the Ginnie Mae program. And under Ted's leadership, it has truly been a game-changing experience for all of us. I can tell you that Ted truly gives his whole heart to his work, and he is a tireless advocate for Ginnie Mae. He is determined to see that Ginnie Mae has the resources it needs to operate efficiently and effectively, and to provide the customer service that all of you deserve. Please join me in welcoming the Honorable Theodore Tozer, President Ginnie Mae, Ted Tozer.
Mary, thank you for those kind words. I really appreciate it. Welcome to the Ginnie Mae 2015 Summit. It's great to see so many people here at our third summit. This event has grown each year, both in importance to the industry and the number of attendees. This year, over 700 people are joining us today, our largest crowd ever, and it's truly an international group. We have representatives here today from the British, Chinese, and Japanese governments. To them I say, Ohio and Ni hao. Thank you for being here. Thank you for being our partner. We have a great program for you today, from workshops covering everything going on at Ginnie Mae to the big issues of our industry. We look forward to your feedback. Everyone here today, particularly if you're a Ginnie Mae issuer, you've been part of the biggest transformation in the history of mortgage finance. The theme of this conference this year is Game Changers. Ginnie Mae was actually created based on the idea that the environment would remain static. Our infrastructure, including our small staff, was based on the premise that the MBS program would never change. All we really need to do was keep an assembly line running. But today, almost nothing fits on the assembly line. You've probably heard me talk about the massive shift in our issuer base to independent mortgage bankers, new business models for managing mortgage servicing rights, layer upon layer of confusing and conflicting regulations, and a more prominent FHA and VA. These things and more have changed the game for all of us. We work every day because we know having a home is the ultimate game changer for the American people. So again, thank you for being our partner. This morning, I want to look ahead and talk about how we are meeting the challenges I just referenced. But first, let's take a look back at what we've accomplished together over the past 5 years. In fiscal year 2015 alone, there are over 4.9 million families, most of modest financial means, that have directly benefited from the Ginnie Mae Guaranteed Securitization Program, and that's because of all of you. When banks left the mortgage market en masse, families depending on us experienced very little interruption in getting a mortgage, and that's because of you. Ginnie Mae took the chance. We embraced and supported independent mortgage bankers in our program. This decision turned out to be the right one. Certainly, it kept credit flowing. In the last 4 years, over 5.4 million families have benefited because Ginnie Mae supported independent mortgage bankers. If we had acted differently, either these people would have had to pay more for their mortgage or possibly would have been shut out of the mortgage market completely. Because of you, these families have an affordable mortgage in a place they can call home. Also, during the last 4 years, Ginnie Mae issuers pumped an additional $602 billion into the housing system, while Fannie and Freddie's presence was small, if anything. That's because of all of you. And if you look at our monthly volumes with the GSEs and Ginnie Mae over the past 2 months, you'll see that we have surged to the top of the list. And that's because of you, and all of you. These are impressive achievements. Together, we are making a difference. So things are going well. Mark Zandi will tell you later today that we are in a sweet spot. What could possibly go wrong? Well, now it's time in my speech to introduce the word but. Are you ready? Yes, we've had great success, but if Ginnie Mae's resource challenges are not addressed, we will have to slow down that assembly line. Here's why. 5 years ago, when it came to Ginnie Mae was like the little engine that could. It was chugging along with a business model designed for issuers that were mostly large and regional banks. They all had a strong and simple balance sheets, financial structures that were relatively simple, yet even in that environment, Ginnie Mae could barely keep up with its just 70 employees. Our engine was huffing and puffing, and it was definitely struggling. Many of you know what's happened since. Our issuer base has doubled. Today, almost 2/3 of Ginnie Mae's guaranteed securities are issued by non-depositories. And independent mortgage bankers are using some of the most sophisticated financial engineering the industry has ever seen. We're also seeing greater dependence on credit lines, securitization involving multiple players, and more frequent trading of servicing rights. All these things have created a new and challenging environment for Ginnie Mae. Frankly, as we look forward to the future, I do not believe we have a large enough engine to deal with the steep hill in front of us. In other words, the risk is a lot higher, the business models of our issuers are a lot more complex, and add in the sharply higher volumes, and those risks are amplified many times over. To confront this level of enhanced risk, we simply must become a different organization. Right now, we're doing the best we can with what we have, but the challenges keep growing. Our budget, which stands at $23 million for salaries and expenses, simply does not allow us to make the changes needed to keep pace with the transformation this industry is going through. We're managing a $1.6 trillion portfolio of outstanding guarantees. On a monthly basis, we're doing more business than either Fannie Mae or Freddie Mac. Yet, we are operating with the infrastructure and platforms that sometimes remind me of the military's use of pontoon bridges, temporary structures that are cobbled together to deal with unexpected obstacles and challenges. We also have depended a lot on luck. Luck the economy does not fall into recession and increase mortgage delinquencies. Luck or independent mortgage continue to have access to ample credit lines. And the luck that nothing falls through the cracks. If you think about the impact that Ginnie Mae has on the mortgage industry, as well as on the economy in general, it's too important to leave to luck. Instead, we need to face up the challenges that are presented in this new environment. Fortunately, we've got a good plan. When the bills are processed to monitor issuers with sophisticated financial oversight capacities similar to that of the FDIC. One will give us needed resources to recruit and retain talented staff. One will create new operational infrastructures and platforms to replace all those pontoon bridges with permanent steel reinforced structures, strong enough to manage our 430 issuers no matter how sophisticated their business models. One that creates a risk management system that supports millions of families who depend on government mortgages. Our vision for the future, a new standard for Ginnie Mae and for the housing finance industry in America. A security that preserves our guarantee, which makes a 30-year mortgage possible, but puts the government in the most remote position possible as far as risk. A common security that creates some have called the ultimate level playing field, one that can attract a broad, diverse investor base, both here and abroad. An operating securitization platform that is flexible and durable enough to handle fluctuations in the mortgage market, but provides standard data that allows investors to feel comfortable. And a business model where private capital gets the most reward, but also takes on most of the risk. That's our vision of the future, a future we can have together. It can create game changers in the lives of the people we serve. However, whether we have the resources to implement this vision is not entirely up to us. The reality is we depend on Congress to support the increased funding needed to have this vision come true. Currently, our budget request for 2016 is just $5 million additional dollars, which Congress has denied. This is in spite of the fact we don't use a dime of taxpayer money. In fact, last year, we made a $1.5 billion profit, and on average have generated $900 million profit for the U.S. Treasury over the last 5 years. We realize the industry is currently grappling with an uncertain regulatory environment that's challenging to say the least. We don't want to create additional obstacles, but Ginnie Mae has to do something. So in the coming weeks and months, we will make announcements about the steps we are taking until our staffing situation improves. But even so, I am still focused on a favorable outcome. Together, I believe we continue to make a difference. The alternative would be to remove the opportunity for affordable mortgage finance for millions of people because Ginnie Mae had to back away from the market. For almost 50 years, Ginnie Mae has served the mortgage market well. We have introduced historic innovations, such as the mortgage-backed security. We have weathered many storms as business cycles come and go, including the Great Recession, which perhaps was the biggest threat to housing finance since the Great Depression. And together we made sure that even during the worst times, qualified borrowers could still get a mortgage. In fact, I sometimes wonder if the interruption was so minor that it obscured the challenges that I just referred to. We may have made it look just too easy. Through it all, Ginnie Mae has persevered. And what has remained steady through all the changes and upheaval is we've always met our two primary responsibilities: to maintain our common securitization platform and to protect the government guarantee. Today, I believe we are at a crossroads in the history of housing finance in America. The decisions made by Congress, policymakers, and many of us in this room will have consequences for millions of people: homeowners, renters, people in assisted living, and for the veterans who depend on us in order to access the benefit they have earned defending our nation. Because ultimately, we are deciding whether our program is for the many or for the lucky few. To me, making sure that people have access to affordable mortgages, well, that is truly the game changer. Thank you. Take any questions anybody would like to ask. Wow, either everybody's asleep or I answer everybody's questions.
Hi, Beth Solomon from U.S. Bank Corporate Trust Services. Could you comment on the platform that Ginnie Mae has built and its ability to be used more broadly?
I mean, basically, our platform is extremely similar to what Fannie and Freddie are trying to build out. I mean, we accomplish what they're trying to get to, where they're trying to have a common securitization platform that Fannie and Freddie both could use with a common security. That's basically what we do. But we do it for 430 people. They're trying to do it for 2. But we basically are building the same kind of process where basically we report our disclosures to our investors. We have a common data set we get for our issuers, everything that Fannie and Freddie are trying to do with their common securitization platform. So in theory, our securitization platform is tied to FHA, VA, and rural housing products as collateral. But again, our systems themselves are all really generic. I mean, we really aren't tied to any particular program as far as within the operational structure of our platform. It's all just tied to charter and what can be used in our securities. But our platform is very generic. Any other questions? Yeah.
I'm Rob Couch I'm a lawyer with
I've heard of you.
the Bradley firm. Ted, you've been vocal about needing budget resources to add a staff of examiners. You want to explain why we need another examination?
Well, it's not so much to have an examination. What I'm looking at is the concept that I really want Ginnie Mae to assure that all of our issuers can be successful. And again, with the concept of making sure they have the financial strength, the cash flow needs, whatever. So it's more of, instead of an examination, I look for it more as a free consulting service. Because to me, if we give good customer service and we're there to help you implement your business plans and be successful, we all win. Because if you're able to make your pass through, do what you need to do to be successful, then our guarantee is protected. You're protected with your capital, your assets. But the biggest challenge we're just running into is the fact that, like I said in my comments, historically, Ginnie Mae has relied on FHA or FDIC or the OCC to do that same kind of consulting. You know, if you're a bank, they would come in, they would tell you, you should manage your duration of your liabilities a certain way, whatever it might be. And we're looking to try to do the same thing for independent mortgage bankers, again, to make sure they're successful. I mean, my goal is, I've told Michael Drain numerous times, that my feeling is that every time an issuer fails in our program, we failed. Because our goal should be, everybody should be successful in our program. So I don't look at it, as Rob said, I don't look at it as really an examination. It's more of us being there to help you be successful, to help you see what's coming at you, to have the time so that, for example, if you're going to have a cash crunch in 6 months, we can tell you about it 6 months ahead of time versus you calling us up the day your pass-through's due and saying, I'm out of cash. So that's what we're trying to accomplish with this process of the staffing. It's to more bring stability to the industry through having a strong, solid, vibrant issuer base.
Denning from the Federal Reserve. So I just wonder if you can comment on something, because in your speech you mentioned about the uncertainties in the regulatory environment, and I noticed there's two significant trends in the mortgage area. One is the qualified residential mortgage is one kind of direction. The other one is risk retention rules for the securitizer, to put 5% capital when you securitize. So do you think those kinds of trend will have what kind of impact on the mortgage production and origination of securitization in the future? Thank you.
Well, again, I think both those regulations you were talking about, at least from our perspective at Ginnie Mae, I think we're kind of exempted from both those, so it shouldn't affect us that much. I guess the key becomes more of the GSE, Ginnie Mae world. And I think that there's more fundamental problems, I think, with the private label securities than simply QRM and risk retention. I think there's other issues that have to be dealt with to get the PLS market back to really a life of being any kind of major player in the industry than what it is today, which is kind of high quality collateral, type issues. So from that perspective, I think from our perspective, Ginnie Mae, I think it's not going to really affect us at all, except for possibly continuing to keep our volumes high, just because, again, the private label is not getting off the ground. But the regulations I was talking about were more geared toward the origination and so forth because of all the uncertainty because CPB is still evolving a lot of its rules and regulations and how to originate and so forth. So I was talking more about those kind of processes of actually creating a mortgage and the uncertainty until the regulators finally evolve to the point of exactly what their final rules are that need to be generated for Dodd-Frank and so forth. That kind of uncertainty is what I was referring to as far as for the industry right now. Well, it looks like that's about it. But again, thank you. Thank you, and please stay seated for our next panel. Michael Drain's put together a great group, and I'm really excited to hear what they have to say. So again, want to welcome our next panel, and again, thank you.